Hello, I'm Liz Lumley of Finextra, and we're here at EBA Day in Amsterdam. And today I'm speaking to Penny Hembrow of CGI. And
Hi.
we're gonna start off talking about payments. Payments are going through a massive amount of change at the moment. But are banks focusing on the right projects?
Well, I see a lot of banks sort of talking about getting a new payments hub, and that seems to, and they talk about agile and infrastructure and architecture quite a lot, and thinking that that's going to solve what's happening in the payments world, which is a substantial transformation across the payments ecosystem. Now, for some banks who have quite a lot of legacy systems, they've got a lot of duplication. They need to, they think that what they've got is not sufficient to cope in that modern world, and they're of the scale to actually replace and get the benefits from a new payments hub, then surely that could be seen as the right action to take. But for banks that have quite an efficient payments hub already, or components which they can then think about organisationally bringing together. So it's not always about systems, it can be about data and it can be about organisation. And then actually think about the straight through processing. So is it much more about putting on intelligent gateways? Or is it actually that the market's moving so fast that they need to really think about how do they build out their services to their corporates or to their C2B or their B2C, and how do they help that ecosystem, and is that where they're going to make their money? So I think each bank needs to think very clearly about where they are from a payments maturity point of view, and what is the right actions, or what are the right actions to take, and those can be systems organisation, data, governance, as well as building out new service components. And I think that breadth of understanding across the payments value chain really needs to take place at the moment, and I'm not seeing that kind of dialogue happening yet.
So I thought it was interesting you talked about banks' place in the modern world, and we had a Challenger keynote at EBA Day, Chris Larson from Ripple, and he talked a bit about sort of the Internet of Knowledge, the Internet of Things, and the Internet of Value, which sort of brings in the idea of the blockchain and distributed ledger. And he mentioned that banks really had a place in that Internet of Value. Do you agree with him? Do banks have a place?
Well, I thought that was a fascinating conversation. It really resonated with me when he related it back to the Internet of Things and how the Internet of Knowledge had really developed in the market. And he was making the point that payments, or value as he said, talked about it. So, it's cryptocurrencies as well as real currencies. Anything that is transferring value between A and B, be they cross-currency or within a domestic environment, is actually really following the same path. And I found that a very interesting and thought-provoking analogy, because how does a bank then play in that? Now, clearly, value has to have a fundamental assurance of being transferred properly. And that's what he was saying, is that the regulators and the banks and the other participants are really driving that. And this isn't the situation where the new technologies are going to get rid of the banks. It was quite interesting coming from him, given that he's from a fintech.
I heard like sort of a collective, oh, okay.
Yes, that's right. And I think particularly the money banks, so the big banks around the world who do the money exchange, the value exchange around the world, have a key role to play in this, particularly if you look at where liquidity comes from, and intraday liquidity. So if you take the point today where we don't have real-time payments around the world, and we certainly don't have international real-time payments, so cross-currency, and he was saying that's the way it's going. How do you make sure that our intraday liquidity rules, or inter-minute, I've just heard in the last sentence, inter-minute liquidity, which is the bedrock of the payments industry, actually works? Now, he was also saying in the last session that the impact of Basel III is really having a big impact on this, because what's happening is that as banks are exposing their own liquidity into the marketplace, corporates are now watching this quite significantly and thinking about their own scheduling of payments. So at the moment, in order to manage and keep the standard deviation, within a certain threshold, banks are making sure that they schedule and their payments in order to make sure that the buffers in the market are not their own buffers are not too high. But they're saying now that the corporates are now doing it because they can see this data coming in. So if you go to a real-time environment where everybody can see everything, how do you manage the liquidity? And that's why I think the central bodies, the regulators, so the central clearing mechanisms, central regulators, and the key money banks around the world really have a fundamental part to play in this revolution that's going on in payments.
So I'm going to keep on the liquidity theme.
Yeah.
So where's the liquidity coming from?
Well, the Ripple conversation this morning was actually saying that there's excess liquidity around the market from the hedge funds and the asset managers, which are not yet coming into the marketplace, which I thought was interesting. But I think with real-time payments, liquidity can come from all kinds of sources. So I was talking to somebody this morning that in Asia at the moment, people are saying, the banks are saying to consumers, let me sweep your account every night and let me pay you for that liquidity instead of going into the market for liquidity. We could see corporates doing that with their employees. We could see different types of liquidity coming into the market in order to just loosen up that whole liquidity. But I think that's where a lot of the development's going to come as we see real-time payments coming into this internet of value. That we'll see this loosening up, but the interdaily liquidity management piece is absolutely critical, and that's where regulation and the banks really need to work together to think through how that's going to happen.